Welcome to Dollars with Diana. Hi, I'm Diana, and in this episode, I'll be sharing with you if SoFi is a good stock to buy. I'll be breaking down the company's valuation, future growth, past performance, financial health, management, and ownership. So let's go ahead and start with the earnings forecast and if SoFi pass all of risk checks. So let's go ahead and check on these risks. For example, is it a good financial position? Yes, the debt level is low and not considered a risk. Are they forecast to achieve profitability? Yes, the company is currently profitable. Are revenue and earnings forecast to grow? It is forecasted to grow an average of 30% per year for the next 3 years. And do they have high quality earnings? Yes. So let's go ahead and continue our evaluation. So community versus my fair value. Also, we have SoFi competitors. So right here we have Kaspi, Synchrony, Ally Financial, and First Cash Holdings. And then we have price and history performance here. This is for the past year. I don't know where to put my head. So here we have the debt offering, executive board change, product update, and executive board change here. So from April, July, October to right now, 2025. News and recent updates. So we have SoFi Technologies Q4 preview valuation has caught up with their earnings, which is a good indicator. SoFi, wait for the bubble to burst first. And then these are older ones. 10 million reasons to still own from December 23rd. It looks like Seeking Alpha published that one. Then we have shareholder returns. So 7-day returns are 13%, U.S. consumer finance 7%, and U.S. market 3.2%. 1-year return is 132%. Yes, remarkable. 59% U.S. consumer finance and U.S. market 24%. So price volatility, here's the average market volatility, and we have SoFi's volatility. So it's in the mid-range here. So we have some consumer finance industry, which returned 60% over the past year, and then the U.S. market exceeded it and it returned 24% over the past year. So stable share price, right? So SoFi has not had significant price volatility in the past 3 months compared to the US market. And the weekly volatility is 8%, which has been stable over the past year. About the company, it was founded in 2011. It has 4,400 employees. The CEO is Anthony Noto. It is, if you're not familiar with SoFi, it provides various financial services in the United States, Latin America, and Canada. And it operates through 3 segments: lending, technology platform, and financial services. So here we have SoFi Technologies fundamentals summary. So the earnings is 183 million, revenues 2.5 billion, right? Market cap is 19 billion, PE ratio is 103, and 7.6 PS ratio. So, the fair value valuation analysis, here we have that we shared earlier that it's 194% overvalued. The fair value price would be $5.98, which would be about right, and the current price is around $17. I actually purchased SoFi, I think I'm at $13.50 average range, so I own 100 shares of SoFi. More earnings and revenue here. So we have the revenue 2.5 billion, cost of revenue 437 million, 2.1 billion in gross profit, and other expenses are 1.9 billion, and the earnings are 184 million. So the next earnings date is January 27th, and here we have earnings per share. The gross margin, net profit margin 7%, and debt to equity ratio is 52%. So let's look at the valuation here. Is SoFi undervalued compared to its fair value? Analysts forecast and its price relative to the market, and the valuation score is 0 out of 6 indicators here. It did not meet any of these indicators. So we just talked about the price to fair value, and below fair value, SoFi at $17.59 is trading above our estimate of the fair value of $5.98. Significantly below fair value, SoFi is trading above our estimate of fair value. So we have key metrics here, which are the earnings. So as SoFi is profitable, we use its price earnings ratio for relative valuation analysis, and the PE ratio is 103 times. So here we have the price to sales ratio, which is 7.6 times. And then we have price to book ratio, which is 3.1 times. And then other financial metrics that can be used for relative valuation. All right, so price earnings ratio versus its peers. So here we have SoFi Technologies as a peer average is 13.7 times, and SoFi is 103.5 times. First Cash Holdings is 20.7 times. Ally Financial's 15.6 times. Caspi 9, and Synchrony Financial 8. So that just shows you how much significantly higher SoFi is compared to its competitors. All right, so SoFi is expensive based on its price to earnings ratio, 103, compared to the peer average price. So here we have historical price earnings ratio. So here, my head there. So here we have 0 in 2022, and if we move here, it just has jumped. I mean, it jumped from June 29, 2024, from September 45 times, and then in January 105 times. Do you see that? Insane, right? So price to earning ratio versus the industry. So the average industry here for the US consumer finance is 11 times, and SoFi is 103. So here we have other 3 companies to compare. We have SoFi 103 times, estimated growth 30%, market cap 19 billion. ML Moneylion is 301 price earnings and estimated growth of 92% and 972 million. And QD is 99 times. It doesn't have an estimated growth, and it's 564 million. I will do some more research on this money loan one because I am curious how it has such huge growth. Okay, so then we have price to earnings ratio versus fair value. So we have 29.4 is the fair PE ratio, and the current is 103. Analysts price targets. In January, the share price is 17. Average 1-year price target is $12, and the agreement is low. Is spread more than 15% from its average. So here we have the forecast. It doesn't look very good. So we have 2023, and you can see here it was $6 a share price. Then it kind of went up and down in 2024, $6, average price $8.98, and then it really skyrocketed the end of 2024 to $16.41, and then right now $17. So just, I mean, massive price increase over there. So the analyst price target is $12.60. So you can see this projected is lower to $12.60 out of 15 number of analysts. So here's discovering undervalued companies. We have Merchants Bank Corp. Let's discover undervalued companies. We have Merchants Bancorp, Galaxy Digital Holdings, and Prague Holdings. So we can look into this further at another episode. Future growth, it meets 4 out of 6 criteria because it is growing. The EPS is expected to grow 30% per year. Returning on equity is forecasted to be 9% in 3 years. So the key information that we just shared here, analyst coverage is good, and recent future updates, price target increased by 9%. So that's good. earnings and growth forecast. This is a forecast in December of 2026, but these are just analyst forecasts, so we don't really know for sure. So it's just something that they just try to predict with data. And then we have analyst future growth forecasts. For the company, 30%, for the industry, 13%, for the market, 14%, and forecast annual revenue growth, 13%, industry, 11%, and 9% for the market. So we have earnings versus saving rate. SoFi's forecast earnings growth is 30% per year, and the savings rate is 2.6. Let me just take a sip of tea because I've been talking this whole time. And just quick question for you. Do you have a money block, and how do you know for sure? Make sure to take the free quiz down below to find out. All right, so it has earnings versus market. SoFi earnings are 30% per year, forecast to grow faster than the US market at 14% per year. High growth earnings. SoFi earnings are expected to grow significantly over the next 3 years. SoFi's revenue is 13% per year, is forecast to grow faster than the US market at 9% per year. The one that it didn't qualify is the high growth revenues. The SoFi's revenue of 13.4% per year is forecast to grow slower than 20% per year. So earnings per share forecast. So here we have, move this here. Here we have 2024. This is March 2024. This is EPS in a negative. Then we have September in the positive 18 cents. We have December 30th, 2024 in the positive, and it predicts it January 2022. It predicts it in the positive 28 cents, and then for 2027, it predicts it in positive 0.48 cents. Future return on equity. So the company is at 9.3%, the industry is at 15%. So here we have more growth companies to compare. So past earning performances, it passed 3 criteria checks out of 6. And it has key information where it has 17% earnings growth rate, 72% EPS growth rate, and the return on equity, it says 3.5%, net margin 7.3%. All right, and then we have revenue and expenses breakdown. Okay, I'm just going to move my head out of the way. So we have from 2017 to 2019, revenue, gross profit, 2.08 billion, earnings in 2023, 1.84 million, expenses 1.9 billion, and then a general administration, which is 1.14 billion, other 40 million, and sales and marketing $719 million on sales and marketing. That's a huge budget. All right, back to my head. Earnings and revenue history. So we have the revenue, 2.5 billion per year, earnings 184 million per year, and then free cash flow is negative 1.32 billion per year. Quality earnings, it says SoFi has high quality earnings and growing profit margins. SoFi becomes profitable in the past. All right, so we have past earnings growth analysis for the company, 17%, industry 4.3%, and the market 12.8%. So it says that SoFi has become profitable over the past 5 years, and the growing earnings by 17% per year. Return on equity is the company's 3.5%, while the industry is 15%. Return versus assets, it says a company's 0.5% and industry's 3.6%. Return on capital employed last year, these numbers are not available in the data here. Discover past performing strong companies. We have PaySign, Diversify Financial, and Apollo Global. The SoFi Technology balance sheet, it has a health criteria of 4 out of 6. The key information is debt to equity is 52%, while the US debt is 3.23 billion in debt. Financial position analysis. Short-term assets are 26 billion, liabilities are 24 billion, long-term assets are 4.7 billion, and liabilities are 3.3 billion. Another sip of tea here. Debt to equity history analysis. So the debt was in September 2024 3.22 billion, and the US is 6.12 billion, 52.7% debt to equity ratio. You can see in this chart here. SoFi's net debt to equity ratio is considered satisfactory at 14%. Reducing debt, SoFi's debt to equity ratio has reduced from 267% to 52.7% over the past 5 years. What it didn't meet is debt coverage. SoFi's operating cash flow is negative, therefore debt is not well covered, and insufficient data to determine if SoFi's interest payments on debts are well covered. Here are the balance sheet. More healthy companies. SoFi Technology dividends. It does not provide dividends, so we're not going to cover this section. Stability and growth payments. I do not have information on those dividends. And then let's look at management. Management criteria check meets 3 out of 4. So the SoFi CEO is Anthony Noto, and he was appointed in 2018 and has a tenure of 6.8 years. Total yearly compensation is $18 million, comprised of 5.5 salary and 94% bonuses, including company stock options, and directly owns 0.87%. If you're liking this comprehensive overview of SoFi, please hit that like button because takes a lot of effort for me to record this, and I hope that you are finding this valuable. So it lets me know that you are when you hit that like button. Thank you. All right, so here we have some news here. Independent director recently sold $833,000 worth of stock. Maybe he bought a new house with that. CEO compensation analysis. So it just looks like it just went up. So it went over here it shows 2023 it was still high, but then it dropped and then it went up higher. All right, from the company earnings. Anthony's compensation has been consistent with the company performance over the past year. Leadership team, we have George, Anthony, Christopher. Tenure 12 years, 6 years, and 4 years. Compensation $347,000, $18 million for Anthony. Christopher gets $6 million for the CFO. There's more, but I think that's sufficient right now. Average tenure of employees is 3 years, and average age is 51. The board members, I serve as the president of a nonprofit, and my salary is $0. I actually end up paying more just to be supporting the nonprofit. But look at these board members. They are getting a compensation of $347,000. Oh yeah, Anthony, the same guy, $18 million. Madalena, independent director, $280,000. That's pretty sweet. Average tenure for the board members is 4.4 years and 60 years of age. Ownership. This individual owner, Eric, owns 30,000 shares. Maximum price $16. These guys sold out in December. And Silver Lake Technology Management Company sell. I don't know if they already sold it or I'm not really sure what that means. But they had 31 million shares. Quater Investor Quater, I'm not sure how to say that. Investment Authority, 19 million shares. It says sell. So are they trying to sell all these shares? Have they sold all these shares? I don't know. Well, I mean, this was in June 2024. Maybe they sold it. All right, so here we have insider trading volume. Shares sold, 31 million, 19 million, 69 months. Shares bought, 30,000, 117,000 bought. So you see how the insider trader, they are all selling, and it doesn't equate to how many people are buying. Not nearly the same. All right, ownership breakdown. We have the general public owns 54%, institutions own 44%, and individual insiders 1%. Dilution of shares. Shareholders have not been meaningfully diluted in the past year. That's good. Here are the top shareholders. We have the Vanguard, BlackRock, and others. Other information, it is on the NASDAQ. Shares outstanding is 1 billion. It was founded in 2011. Number of employees is 4,400, and the location is in California, San Francisco. Here we are. Listings on the NASDAQ, BMB, and DB. Company analysis. Okay. Company analysis, financials. And then we have more data sources from the financial 10 years of income statements, cash flow statements, balance sheets, and all the forms here. I just realized my head was cut off this whole time. So I hope that this was helpful for you, and let me know in the comments below. Are you a SoFi holder? What are you doing with your shares? Are you planning on selling them, buying more? Let us know in the comments below, and make sure to grab all of the free links down below. I hope to connect with you soon, and in the meanwhile, check out this video next.